Welcome back after a long weekend. I made several videos over the last few days. If you haven't seen them, they're worth watching, and I'm going to be running back to that analysis in the future, so it might be good to catch up on that. I'm going to cover SPY, IWM, VIX, and AMC really quickly, and then do a little extra intraday charting as well. So let's get started. SPY. Today was a big green day, a pullback into a broadening ascending wedge or a megaphone, whatever the corrective pattern is. And I did say that this was likely a 65% chance. Bukowski advises to always expect it to happen, and here it is. So that puts us back into the pattern, but whether or not the price stays there has yet to be seen. I do think that this move is initially bullish, but I do not expect it to continue bullishly. This gap between Friday's close and today's open is a rising window and does generally mean that the price will continue to rise. However, it is more likely that because we are in a downtrend and we don't have any bullish catalysts, that this gap will fill in a few days and the price will continue to tank, reaching this price target at $350, which was a price target I got from calculating a pattern that starts with this gap between the 10th and 13th of June, and then these two lower highs and two lower lows. These candlestick patterns are a little less reliable than longer patterns. The longer the pattern, the more reliable. So we'll see if we get here or not. I expect we will. And for the sake of reaching this price target, I'm going to say that this is probably going to reverse head lower. IWM looks more that way than SPY does. You can see that there was a similar gap between Friday's close and today's open. IWM rose, and when it reached $170, there's a level of resistance there, and it could not break it. And it turned around, reversed, and what do we have? We have this mighty bearish doji-looking candle. So this does look less bullish than SPY, more bearish, like the price wants to continue to fall, which it may. VIX today gapped down and formed a hammer. So this could be a bullish hammer reversal on VIX, implying that we have some volatility coming, and that would be a bearish thing for the markets and would signal the pipe top on SPY and a tri-star pattern perhaps, or a bearish doji confirmation on IWM. AMC, not really much here to read off of the candle. It was bearish. We did close within Friday's range and failed to set a high above that from earlier this month on June 15th. So I'm thinking that AMC is probably going to go back down and touch this pink zone. I can see a green VIX, SPY reversing, closing outside of the pattern, and IWM probably even gapping into the close on or into the open for tomorrow. Happening this week. I see that happening. That looks probable just by looking at the prices. I want to hop into a smaller time frame. I like the 15-minute time frame. It shows a lot of detail and it's easy to read. So on AMC, here we go. The 15-minute chart, you're going to see a series of peaks and this downtrend that forms. This does extend all the way back to that 34 high we had a couple months ago. That was a while ago. It seems like forever ago. And the price did encounter that level today, that trend line, tried to break out and was instantly rejected. Well, it was rejected. It reversed, and we're seeing a very, very small ascending broadening wedge, which is an expanding diagonal triangle. Bukowski says the breakout is typically pretty random. It's downward 52% of the time. If the price does break out, the target's going to be the bottom of the pattern, which is $12, $13 here acting as resistance. And you can see that the price did break out of the pattern, touch down on this downtrend, and has now come back up, touch that bottom trend line of the ascending broadening wedge, and rejected lower. What's interesting is, typically I'd want to use the very tip of this wick to start my chart pattern. But rather than do that, I decided to look at the RSI. I've been observing chart patterns in the RSI. It is, after all, an expression of averages within the price. So when the price isn't deeply oversold or deeply overbought, I think that we can actually find some patterns. There might be some value there. So here I have a right angle descending broadening formation shown on the RSI, and that helps me use the close here for this horizontal level of support and resistance in that rad BF, right angle descending broadening formation. And when I use the RSI to find the top of my trends or my trend lines for the pattern, you can see that I actually want to pull this down so I get a touch point here and here where the price and the RSI are agreeing on the top of a pattern. So maybe I even need to broaden the bottom too. See, there's a touch there, not quite a touch there, a touch here. So the case could be made that maybe this pattern needs to open up a little bit and probably that's where we're at. We're just testing that lower level of this ascending broadening wedge, and tomorrow's open is going to be a big signal for AMC whether or not we get a breakout or bearish continuation. Very, very hard to call here. Let's go have a look at GameStop. I don't look at GameStop as well. We do have a beautiful price mirror. My cursor is right on the center of that mirror. You can see the price broke a downtrend, skyrocketed higher, formed a pennant, tried to break out, was rejected by a downtrend, and now is finding support, but also turning down a little bit towards the end of the day today. So if this is a price mirror, well, a big dump is probably going to mirror this big run. Again, it could really go either way, right? Opening SPY on the 15-minute chart, you're going to see that, let's just blow this up a little bit. The gaps have a little less meaning now because we have more chart to work with. And when I just look at it right away, I say, hey, look, there's a horizontal level support and resistance, and we can connect those lows. And what is this? This is a right angle broadening ascending formation. We have the touches 1, 2, and 3 along the top and 1 and 2 along the bottom. And today would form a partial rise, which is a bearish omen, implying that if the price does not move higher at open tomorrow, that it's likely the price will continue to move lower and form a downward breakout and head down to 350, which is what I'm expecting. Going to IWM on the same time frame, I'm just gonna knock them out. Okay, now we're starting to see something a little more promising. Or are we? We're not. We're totally not. It's the same. Check it out. We have the same trend line on the lower part and a horizontal level support resistance at the top, and well, a partial rise forming here off of a broadening bottom target, which was a technical target from a while ago. So yeah, it's not looking great. Volume wasn't spectacular. Implied volatility is meh. RSI reach oversold, turned down. Tomorrow is going to be a big day, a big signal day. Tomorrow's open especially is going to be very, very important to watch. At this point in time, I still am looking at more downside. My bias is bearish. This is a fantastic point to form a bullish reversal. However, that is not what I am expecting. I'm going to go ahead and hop off and start editing this video. If you like, consider subscribing. Happy trading.